The dangerous K-shaped recovery. Will the housing bubble burst, or will it lead to social unrest? Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because we're going to have a look at two articles today and a few other things, discussing, and warning from the IMF regarding divergent recoveries, or K-shaped recoveries, and how the Yahoo mainstream media is spinning that into some concerns regarding a housing bubble bursting here in Australia in particular. Some other concerns that I would have is, these K-shaped recoveries that are happening not just in Australia but in many parts of the world and in countries as a whole is going to exacerbate the divide between those that have wealth and those that do not. And it's going to, here in Australia, it's going to make it even harder for people to jump into the property market. We'll have to see. So let's start by having a look at this warning from the International Monetary Fund. So, and this is the speech by Greta Gopinath. So it is 1 year into the pandemic and the global community still confronts extreme social and economic strain as the human toll rises and millions remain unemployed. Now we have to remember, a lot of these are due to government interventions. Don't forget that, because they're going to... no one in the media is highlighting the fact that it's the government interventions that are causing this, that these were not the only responses to this situation. Alternatives were proposed, they were ignored, or they weren't accepted. I'd say in many ways our bureaucrats have been primed through some of the training activity in the organizations they're involved, so they leapt at this opportunity to be the heroes. What do you reckon? Anyway, yet even with high uncertainty about the path of the pandemic, a way out of this health and economic crisis is increasingly visible. Thanks to the ingenuity of the scientific community, hundreds of millions of people are being vaccinated, and this is expected to power recoveries in many countries later this year. Economies always continue to adapt to new ways of working despite reduced mobility, leading to a stronger than anticipated rebound across regions. Additional fiscal support, in larger economies, particularly the US, has further improved the outlook. But recoveries are diverging dangerously across the world and within countries. In our latest World Economic Outlook, we are now projecting a stronger recovery for the global economy compared with our January forecast, with growth projected to be 6% in 2021, a 0.5% point upgrade, and 4.4% in 2022, a 0.2 percentage point upgrade, after an estimated historic correction of negative 3.3 in 2020. We're seeing this is what they were anticipating, and you can see here they're predicting that it'll improve. They're pinning all their hopes on the vaccine rollout, everyone being successful and without issues. So wider income gaps. The average annual per capita income losses are projected to be highest in emerging markets, excluding China. China isn't an emerging market anymore. The economic complexity is much higher. We need to change that term, everyone. And it's reversing gains in poverty reduction. This is the problem. Now, this is what I'm worried about, that you'll have calls. It'll lead to social unrest, then you'll have calls for more authoritarian and more interventionist approaches to mitigating poverty or other perceived social justice issues. Here is the thing. Capitalism has been the best tool to alleviate poverty throughout all of human history. So you can see here, greater scarring in emerging markets and developing economies. Medium-term GDP losses relative to pre-COVID-19 are expected to be higher in emerging markets and developing economies than in advanced. And we can see here Asia, excluding China, LAC, SSA, Mecca, EMD, the world, and China, the United States. So the United States doing okay. So, and here's the issue. This is what Yahoo just leapt on with regards to the housing bubble, which, could be an issue. But I think the underlying and more concerning and the danger that's going to emerge out of this K-shaped economic recovery that's happening all over the world is that it will lead to social unrest, and that it will lead to calls for ideologically interventionist and authoritarian political movements. Because there's historic precedent for that. and never waste an opportunity, everyone. A high degree of uncertainty surrounds our projections. Faster progress with vaccination can uplift the forecast, while a more prolonged pandemic with virus variants that evade vaccines can lead to a sharp downgrade. Multi-speed recoveries could pose financial risks if interest rates in the United States rise further in unexpected ways. And there is signs of that happening. Look at bond yields, everyone. This could cause inflated asset valuations to unwind in a disorderly manner, such as the stock market, such as Australian houses. What do you think? Crypto, Bitcoin, that's gone up in value significantly. Financial conditions to tighten sharply and recovery prospects to deteriorate, especially for some highly leveraged emerging markets and developing economies. Do you think that's the housing sector here in Australia, guys? I think it is. And this is the projections for GDP growth, as we mentioned before. Now, what I would like to look at is now the K-shaped recovery, and I'll bring up the Investopedia definition of what a K-shaped recovery is, everyone, because I think this is important. It's been discussed more and more in the media, and we're seeing it manifest here, frankly, in Australia. There's some people who have not felt any impact at all for this economic downturn. Some people I've been talking to are busy, flat out, work's been coming in. You can even see it in the comments. There's some people going, I don't even see. Very distastefully going, I don't even know what's going on. Recession, I'm flat out. Yeah, well, mate, you're probably in a lucky situation. Some people are just screwed, really. If you're in retail or in a job, or if all your clients just ended their projects. So, what is a K-shaped recovery? A K-shaped recovery occurs when, following a recession, which we just had, different parts of the economy recover at different rates, times, or magnitudes. This is in contrast to an even uniform recovery across sectors, industries, or groups of people. A K-shaped recovery leads to changes in the structure of the economy or the broader society, as economic outcomes and relations are fundamentally changed before and after the recession. This type of recovery is called K-shaped because the path of different parts of the economy, when charted together, may diverge, resembling the two arms of the Roman letter K. And the key takeaways: K-shaped recovery is one in which we've already different parts here, economic performance in different sectors. Unlike other letter-shaped descriptors, which focus on large aggregates, a K-shaped recovery is described in terms of data broken out across different parts of the economy. The meaning of a K-shaped recovery really depends on the choice of how to disaggregate data across the economy. And here is one example from Investopedia: the economic recession and the recovery. So technology, retail, and software services were doing better in this example than industries needing assistance. Travel, entertainment, hospitality, and food services. Here in Australia, well, travel would be tourism. Just look at the bankruptcies that are happening in certain industries. It's not uniform, sadly. So we have a definition of what a K-shaped recovery is. Now I would like to look at wages growth and housing affordability, because housing affordability here in Australia, and I'm showing this chart a lot at the moment, but it's quite clear. If you're in Brisbane, you've got more opportunity, access to more housing when you're sitting at this income bracket, even this one, than any other city. So go Brisbane. Housing for a lot of people is not affordable, and affordable here is considered 30% or less of the household disposable income. The only places that have any are Greater Perth and Greater Brisbane, and just for these income brackets. So what I thought is we'd have a look, because I often show this chart here, which is the wage price index forecast from the RBA. And what I wanted to show is the wage growth from 1990 to 2000. So I've got two here. I've got a male private and a female private. These are the private sector, because there is a difference between wage growth in the public and private sector. Public, even since I got some really old ABS data, has always been higher. I mean, maybe we're just all idiots being individuals starting our own businesses, guys. Just get that cushy government job. I remember the people at Project Services, they were sitting there, they were doing developments on the side. Banks loved them because they had a government job and they were there forever. That's it. So that's why I'm just focusing on private, because, well, I'm from the private sector. And we actually feel the ramifications of the economy. So, male private in the 90s, 1990 was earning about $550 a week earnings. Female was about $440 a week earnings. I've got the female charts exactly the same, just a bit lower. In 2020, November 2020, male $1,770 a week. That's average, everyone. The median's lower. Okay, but we'll just stick with the average for this comparison. Female is $1,476. Now, the percentage change from 1990 to 2020, 322%. The private sector blokes' wages have gone up. Female private sector wages have gone up 335%. Women are outdoing the blokes, guys. There you go. There you go. Cheers to that. And this is private, guys. It's not all the fake economy of the public sector where they just, put all these artificial things in place. Now, let's look at housing in that same period. How much do you think housing has gone up from 1990 to 2020? I'm going to have a stein of coffee again, or another shot of coffee. You let me know. Okay, let's have a look. So, in Sydney, from September 1990 to September 2020, 565%. So remember wages, 325 we'll say, average, for both of them. There you go, 565% the same period, roughly. Melbourne, 518% for houses. Brisbane, 408%. 370%, okay, we got a 3 here, that's good. 405%. In Canberra, 508%. Oh, sorry, in Canberra, 405 in Perth. 519 in Hobart. And one thing that's interesting in Hobart that we have had a look at has been the sharp decrease in listings, guys. It's just been nuts with regards to the listings in Hobart right now. There you go. That's just the way it is. Darwin. Darwin is the only one that is close to the data. Okay, so female private wages have gone up 335% in that period. Darwin property has gone up 336%. So Darwin wins. It is the only place where wages, well, average wage, these are average wages over the whole country, so I'm sure we'll have to see what they're like in Darwin. Most of them would be public sector, I'd imagine. It's pretty high. But still, there you go. So, and apartments, everything over 400%. So you can see, sorry, Brisbane, 320. That's it. A Brisbane apartment, if you had it bought in 1990, it's kept up with wages. There you go, guys. Brisbane's sounding better. I better not be talking up Brisbane all the time. Then all the people from Melbourne and Sydney will sell their multi-million-dollar houses and immigrate up here. So there you go, everyone. That shows you why it's feeling tougher and harder to get into a property. Look at that increase. I mean, okay, you're earning $550 a week back in the 90s, but look at what your houses were. So, will the housing bubble burst? That is the question. That's part of it, and that is the focus that Yahoo decided to take from this IMF warning. The IMF has warned that rising interest rates in the US could trigger overpriced assets such as the Australian property market to unwind in a disorderly manner. Now, there was no mention of the Australian property market in the IMF blog post. That we weren't even referenced in any of the GDP forecasts. But you can understand why Yahoo and the author who wrote it, what was her name? Jessica Yuan, was concerned about that because, well, frankly, that does make sense. The IMF's warning comes as global stock and property markets have surged despite the pandemic's crippling economic damage. House prices in Australia have grown at breakneck speed despite the recession, dipping briefly in mid-2020 before posting several months of consecutive growth. It's probably gotten worse since the data I'm showing with housing affordability, to be honest. However, the IMF chief economist, Gita Gopinath, on Tuesday warned the global recovery would be derailed by a divergent pace of recovery and rapidly rising interest rates. Multi-speed recoveries could pose financial risks if interest rates in the United States rise further in unexpected ways, she wrote in an IMF blog post on Tuesday to mark the release of the latest World Economic Outlook. This could cause inflated asset valuations to unwind in a disorderly manner, financial conditions to tighten sharply, and recovery prospects to deteriorate, especially for some highly leveraged emerging markets and developing economies. The global economic recovery faces high uncertainty and is threatened by the dangerous divergent pace of recoveries that will see developing countries' living standards fall lower than pre-pandemic levels, she said. AMP Capital Chief Economist Shane Oliver told Yahoo Finance that dramatically rising interest rates would cause debt servicing problems, people to default on their loans, recession potentially, and then house price declines. But the Reserve Bank has signaled repeatedly that it is unlikely to raise interest rates until 2024, though some pundits believe it could happen sooner. And, well, let's have a look here. The Reserve Bank will not raise rates to slow the housing boom. And this is from an article where the governor said, Mr. Lowe reiterated that the RBA does not and would not explicitly target house prices with its interest rate policies. They don't care about house prices. It's not part of their mandate. Now, if it should be part of their mandate, that's a different discussion that we need to have, but they're not worried about it. He recognizes that low interest rates are one of the factors contributing to higher housing prices, and that higher and rising house prices raise concerns for many people. There are various tools other than high interest rates to address these concerns, leaving monetary policy to maintain its strong focus on the recovery in the economy in jobs and wages. You know what they'll do? They'll implement strategies to limit lending. That's one argument people are putting forward. Australian dwelling values posted its fastest growth in 32 years in the month of March, with CoreLogic figures revealing median standalone house prices in Sydney alone were raised by $51,000 in the space of a month. 51 grand in a month. You're earning the median wage of what? $1,700 a week? Let's say $200 a week, just to be generous. So you're up 8 grand, ignoring tax, but the price of housing's up 51 grand. Don't worry, I'm sure that interest you'll get of 0.1% in the bank is going to help. The RBA Governor Philip Lowe yesterday acknowledged that home values had strengthened in part due to the strong demand from first-home buyers, and signalled lending standards would be on a short leash. Given the environment of rising house prices and low interest rates, the bank will be monitoring trends in housing borrowing carefully. Yeah, well, that's what we've heard. CoreLogic said the tighter credit policies would likely have an immediate dampening effect on housing activity, but the Prudential Watchdog's chair, Wayne Burns, has indicated it is not within the regulatory body's remit to contain house prices. Housing is a big part of the balance sheet of the banking system, and making sure that it is a stable part of the balance sheet of the banking system is important, he told the House of Representatives Standing Committee on Economics. But I just want to be really clear that's not our job and never has been. The IMF is predicting global economic growth of 6% by 2021. So, there's the Yahoo highlighting their concern and implicitly saying that we're in a housing bubble here in Australia. So some solutions to this and really some takeaways. Now, my biggest concern and worry about this is the dangers that a K-shaped recovery will exacerbate calls for good old Schwab's Great Reset. More intervention. We're seeing it every day in the media, in the news. Calls for intervention, calls for more support. There'll be calls for UBI, there'll be calls for rent control. That is what I'm concerned about. We need to encourage freedom from debt to promote individuality. I think that needs to be the biggest tool that we can use and increase the general financial literacy of people. Get rid of this mentality about getting rich quick and, all these cons and scams and things, but just simple financial literacy. Then you can get free of debt, have financial freedom and control of your life, and then you're going to be less likely to call for governments taking away your rights. So there we have it, everyone. Some concerns regarding the K-shaped recovery that is facing the world. Fears that it may lead to a disorderly unwinding of asset bubbles, including house prices here in Australia. My worry that it's going to lead towards more calls for interventionist governments and stripping away our freedoms and liberties. What do you think? As always, thank you for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links on Amazon, eBay, Independent Reserve, or AussieBroadband. Take care. Have a great day. I will see you all next time. Bye for now.